So the first thing you want to do while applying this S.C.C into that market that is going up, the market that is buying, and the market that is selling, which is, we can call the market that is going up uptrend, we can call the market that is going down downtrend. So if we understand this S.C.C, what it means, and how to apply it to that market that is going up or down, then this S.C.C will make that market simpler for us to understand. You understand? So that at the right time, we are buying at the right time. When the market wants to start going up, this S.C.C will review the intention of that market, what it is doing next. And for us to understand the uptrend market, that market that is buying, how does the market move? What structure does it give? Like, what information does it give that this market is going up for us to start buying? On a normal note, right, if the market is going up, it's not just going up straight upward like this. Do you understand? It's not just going up straight upward. So if the market is going up, it's going to go up a little bit, and it's going to go down like this, and it's going to go back up again, it's going to come down again, it's going to go up again. Now this thing is showing that the market is going up. We call it the market structure, right? So the market structure, like, it moves in structure, not just like upward, like a rocket going upward. No structure, just straight point. No, it goes up and then down, and then up and then down. So if it is trending, it will likely go in a straight direction, but it is not straight. It's going to be complex. So this is the market. This is the market structure. Let us make this red. So this is the market structure. Now this is how the market moves. The market is going up like this, and this is how the market moves if the market is coming down like this.
Yes.
You can see.
Yes, sir.
This is how the market moves. The market is coming down. So this now, we call this very one right here, we call it uptrend, because the market is going up. Do you understand?
Yes, sir.
So, and this, we call it downtrend. We call it downtrend because the market is going down. So this is an uptrend, the market is going up. This is a downtrend, the market is going down. So if the market is going up, which is this uptrend right here, you want to be buying the market, right? You don't want to sell the market. You are going to lose money. So what you want to be doing is you are going to be buying this market, right? And this other one, what you are going to be doing, you are going to be selling. You are going to be selling this market, right? So if this market is going up like this, you are going to be looking for opportunity to buy this market that is going up. If this market is coming down, you're going to look for opportunity to sell this market for you to make money. Do you understand?
Yes, sir.
So now, all of this right here, this one, the way the market is moving, and then this one, the way the market is moving, these are called market structure. Do you understand?
Yes, sir.
So these are called market structure. And this market structure here like this, for us to know the right time to buy, we need to look for the signal for this market right here. The signal, the first thing we want to look for, if we identify this market structure, which is this buying and the selling. Okay, now let us pick one. The market is buying, which is this one. So now we have identified this market structure that the market is buying on our chart. So now, since we identify the market structure that the market is buying, we know that we want to buy. We do not want to sell. So now we are buying. So where do we buy from? Now this market is moving up like this. So how do we start buying this market that is moving up? So now there comes this S.C.C right here. This is your strategy, how you want to be entering the market and how you want to be exiting the market. Do you understand?
Yes, sir.
All right. So now this S.C.C, the first thing is the signal. Now, what is the signal here in this uptrend? You are going to ask, right? So now the signal is important first. You need to look for the signal. Then if you find the signal, you need to look for the confirmation. Now, when you get the confirmation, the continuation, this continuation is going to be your entry, right? So this continuation is going to serve as your entry when you enter the market. This is the last thing you are going to be doing. You're going to be going through 3 steps. So that 3 steps is: number 1, the signal; number 2, the confirmation; and number 3, the continuation. Once you get the signal, which is the first step, you are going to wait and wait for the confirmation. Confirmation means you are confirming if this signal is correct. So once the signal is correct and you confirmed it, now the third step for you to do is continuation. That continuation is you simply doing what? Is you simply pressing buy. In this continuation, once you confirm it, once you have the signal, you confirm it, the continuation, just press buy on your phone, right? If you are trading with your phone or your computer, so just press buy, because now you've already have the signal, the confirmation, and the continuation is the market is now going up. Now, as the market is going up, you just want to press buy and follow the market upward. Do you understand? Do you understand?
Yes, sir.
All right. So, first thing first, what we want to do is identify the signal, where the signal is in this uptrend market. So now, what I will tell you this is, you want to approach this market, this uptrend market or the sellers market, as a battle between buyer and sellers. So the buyers, their work, their job of the buyers in the market, people that are buying the market, their job is to push the market upward. The sellers, their job is to push the market downward. As you can see in the market structure here, buyer, the market is going up; sellers, the market is going down. Now, for you to understand this very well, we look at this bottom right here, this bottom. So this bottom of this chart here is a low, right? So this is a
Yes,
low
sir.
of the market. So this is a low. Let me look for a color to you. Oh, black is okay. So this is a low of the market, but at a point the market went up and then get to a point and then it stopped. From this low, the market went up, it get to a point and then it stopped. So it stopped at a price, you get it now, and that price is considered higher, which is high. That high, we say high, which is H. This is a low and this is a high, right? Because this was the lowest price of this market, this uptrend, the market structure. This was the lowest price. And then buyers, because buyer, their job is to push the market upward. Their job is just to push the market upward. If you see the market going up, you know that buyers are pushing the market upward. If you see the market coming down, you know the sellers are pushing the market downward, right? So now this is the lowest price, the lowest point of the price of the market. And then this buyer, they push this market upward to this point. So the buyer creates a new high, which is they push this point from point A to point B, from the low to the high, from the low to the high. The buyer pushes the point from the low to the high. So now we have a high right here. right? So now we are going to identify these buyers right here as this icon, as if the market is going up. Do you understand? Which is the buyers are pushing the market up right here. So now the price gets to a point and then the price stopped. The reason why the price stopped is because the sellers jumped into the market that the buyers are pushing upward. The sellers now came into the market and then they are now trying to push the market downward.
But your voice is, I don't know if it's only from my own side. The voice is cracking on, it's cracking.
Dayo, can you hear me?
Yes, sir. Hello, bro.
Can you hear me, baby?
Hello, sir.
Can you hear me, Kenny?
For your own, it's cracking on my own side. Sometimes it will not talk, sometimes it will. I
I
don't know
guess
if
it's
it's
your
from my
network.
own side.
I guess it's your network.
My
Fix your
network.
network. Yeah. Yeah, fix the network. Dayo, can you hear me?
No, let me respond.
Yes, sir.
Alright, let's continue. So, like I said, from the low to the high, you can see that this buyer right here, they push the price all the way up and then the price stopped. Why did the price stop? It's because the sellers, which is this red one right here, they jumped in, they entered the market. They're not trying to push the market downwards. So they pushed the market to this point and then the market stopped. Why did the market stop? It is because this buyer right here, they entered the market again. They did not want the market to go lower than this lowest price, this original price right here. This buyer right here do not want this price to go lower than this. So they will hold the price at a level, which is they hold the price at this level right here. They don't want the price to go lower. So these buyers, they will enter again with their own money, because if the market is going up, the buyers are using money to push the market up. If the market is coming down, the sellers are using money to push the market down. Do you understand that, you? Do you understand? Kenny, do you understand?
Yes, I understand what you're saying.
All right.
You know, so you don't explain it.
So now what you see that these sellers right here, they will hold the price at this level. They are not controlling this price. These sellers are not controlling this price. These buyers are controlling this price, and the buyers are also controlling this price. So now this high and this low, you can see that the price is between these highs and this low. The price is really not going anywhere because now the buyer were in control and then the seller stopped the control and took over, and they are now in control. The buyer now stopped the price. So now the price is between this high and this low, which is this bottom right here. So now this level right here is controlled by the sellers, and this level right here is controlled by the buyers. This level also is controlled by the buyers. Now we see that the buyer has more control than the sellers. The sellers are only controlling one level and the buyers are controlling one level, and they are holding the price now. They don't want these sellers to push the price any more lower than this original low. So what the buyers will do now, they will enter with their own money and then try to take these sellers out of the market so that they can just be like, these sellers now, they are creating a resistance, they are creating a block from the market to go upward. It's like you are trying to reach for the ceiling in your house and then you find out that you are touching a ceiling. So but you want to go higher than that. For you to go higher than that ceiling, you need to break that ceiling, right? You need to break that ceiling for your hands to go through. So for your hands to go through, you need to actually break that ceiling. And how are you going to do it? You're going to do it with force, right? So that is what the buyers here are trying to do. So these buyers that hold the price, right, they will have more money in the market so that they will have more control than these sellers. And now what you see that the sellers, which is these sellers right here, they will start losing momentum, which is they will start losing their money that they are trying to put into the market, because the buyers are taking all the money that they are putting into the market. They are adding their own money to try to push the market more than these sellers. Now, if you see that this market now is trying to go back up again, because the buyers are pushing the market backward up again. But once they get to this level, these sellers will try to hold the price and see if they can sell it back down again. But because these buyers are now ready, they now have more money in the market, you will see that they will try to break this level that the sellers are in control of, which is they will use force, which is they will add more money in the market more than the sellers to break this level, causing a new high. So this first high right here, between this high and this low, you can see that the next thing here is these buyers trying to take over these sellers. And as soon as they take over these sellers, this new high right here now is going to be your first signal. You get it now? So now this signal is going to serve as a signal to you as the individual watching the chart. This is going to serve as a signal to you. And now, since there is a low, there is a high, and this low right here is going to be a higher low, which means this level right here is going to be higher low. Why did we call it higher low? Because this low right here, because this was a low, this was a high, this was also a low, right? The reason why it's a low, because it is lower than this high. You get it now? This low right here, it is lower than this high, and this low right here, it is higher than this low. This is the low, but this low right here is higher. You can see that this low right here is as if it's going up right here. So this one now is higher than this. So we call this one higher low. Now this one is a high, and this is a higher low because it is higher than this one. Now we have a new high, which is our signal. This is our signal. So we are going to identify this as our signal. So this is clearly going to be our signal, which is this signal here. We have identified this signal, which is cool, because now the market is showing us a signal that it is going up right now. So now it seems as if the buyer are now in control of the market, because they are now having more money than the sellers. We only have one seller here, and now we have one buyer and another buyer. We have two buyers and one seller. So the buyers are clearly in control. So now we made a new high.
I have a question when you're done.
All right, ask your question. Do you have a question?
Yes, sir.
All right, ask.
So can I ask?
Ask your question.
Hello, sir.
Ask your question.
Okay, so sometimes this high now, market will break from the previous high to now break out, but later it will continue going down.
Right.
Why is it like that?
This one right here.
Yes, the market might be consolidating, and then when it breaks the previous high, it will just break it, and then it will now go back and start selling.
Well, I will explain all this in a few moments.
Okay, sir.
Yeah, just stay with me.
All right.
So, like as I was explaining now, we said this from this higher low, because this low is higher than this one. This buyer had to have more money, more momentum. So the reason why they can be able to push it more than this one is because they have more money than these sellers. So clearly, because they have more money than these sellers, the market will be reacting to these buyers right here. So now you see that this market now is now coming back up and now gets to this level which the seller are. So these sellers, they can still push the market downward all the way from this level like this. It is possible,
Okay.
right? So that is why you have to wait for a reaction to happen, which is you have to wait for a signal, because this signal right here is what you are waiting for. Without the signal, you are not trading, because the market is not going according to your plan, according to your strategy, according to the S.C.C strategy. The market is not going accordingly. So you need to wait for the signal to review itself first before you start having your confirmation and the continuation of this S.C.C strategy. So now, what we later have here from these buyers, the buyer were able to push the market higher than these sellers. So now we have a new high of the market, because this one is higher than this one. This was the previous high, which is the H. This was the previous high. But now these buyers were able to create a new high, and this one is higher than this one. So we call this a higher high. Higher high. This one is higher than this one. So it is a higher high. And this also serves as a signal to us, the individual that are trading the forex market, that this is a signal, because these buyers were able to push it higher than this one. So now we have a signal, which is a breakout of this high and this low. This higher high is a signal and also a breakout of this high and this low. So this higher high, now we now have our signal, which is this signal now. So now we are looking for confirmation. So what is confirmation? Confirmation is you knowing that this buyer that pushed the price all the way here to this level and caused a high, and then the sellers hold the price, took over this level, which is this level right here, this black line. They are now in control of this black line, just like these buyers are now in control of this black line. These buyers also that hold the price here are now in control of this black line. So these sellers are in control of this level right here. So now we create a new high right here, which is this new high now is also controlled by who? The sellers, because now you can see that when the price gets to this limit of this level, the price stopped. As soon as the price stopped, what we later see is the price start going down. Now, the reaction of this price going down now is these sellers trying to hold the price of these buyers that are pushing the price up. So these sellers, they will clearly want to enter the market again and see if they can stop the buyers of what they are doing right here. So now they finally succeed. They stop them, because their own job is to sell the market. You get it now? So now these sellers now stop the market, and they are now selling the market back down again, because you know that these sellers' intention are going to happen again. You don't want to trade this signal right here, this first breakout. You don't want to trade it. You want to wait, because you now know that at a certain point in time, the sellers will want to see if they can take control of the market again. Now you see the sellers will create a resistance, a new ceiling, a place the buyers cannot no longer go above, which is this resistance right here. So these sellers will hold this level of price, and then they will start selling the price back down. You can see that they are selling the price back down. Once the price gets to this their level right here, right? Once the price gets to this their level, they can clearly still take control of this price right here. Why? Because this was their former level. You get it now? So they are in control of this price. Don't forget, they are in control of this price. Once the price gets to this level again, they can just use the opportunity to just keep pushing the price downward, because now this level right here is a key level to them. This level right here, sorry, this level right here is a key level to the sellers, so they can easily still push the price below this their former price that they have sold from before. So they can easily still push price lower from here
So that is when price gets to this place, you want to watch out, because now what you are waiting for now is your confirmation that you are waiting for, right? So that confirmation will clearly come from this level of these sellers.
Mm.
So now these sellers that are selling this level right here now, you want to wait
Mm-hmm.
to see the reaction, the intention of these sellers, because these sellers can be very tricky. You get it now? So they can be very tricky.
Yes.
They cannot allow this price to go any more higher, because when the price gets to this level and then so to this level, what you see is buyers, these buyers that are creating the higher low, they will still want to see if they can hold the price again around somewhere here. So they will create a floor, which is price cannot go lower than this anymore. You get it now?
Okay.
If price can go lower than this, you know that these sellers right here, they have big money in the market. So they are now using that big money as a leverage to push the market lower massively. So they'll push the market to a certain point, because this is an uptrend.
Yeah.
Because this is an uptrend, the market will clearly want to make a way back up. You get it now? Because
Yes.
if this is not an uptrend, the market will just do something else, something you do not understand, something the sellers do not understand, something the buyers do not understand. So the sellers will be doing one thing, the buyers will be doing one thing, and the market will be going nowhere. The market will either not go up or down. So the market will just do something you do not understand. If you want to try to trade that kind of market, you will end up taking a loss. So you want to stay away from that market, right? But if all what you are looking for are there in the market, you want to be present, you want to be trading that market. So now, as soon as these sellers are selling the price back down, you will find out that at a point, these buyers right here, these two buyers, they will want to
Mm.
jump in again to see if they can hold the price. And when they succeed to hold the price will not be able to go any more lower. The price will now be ranging. We call this ranging. So at a point, the price will seem as if it's forming an equal low. What is an equal low? Now, once the sellers exist their order right here, at this very point right here, you see that these
Yeah.
buyers right here will push the price a little bit to the upside, and then these sellers right here will jump in again, push the
You push
price
it down.
down again. And what you see again, these buyers that is holding this level, they don't want it to just pass
Mm.
this black line. They will hold the level
Just like
and then
that.
put it back, push it back up again. And what you later see
Mm.
is around this level right here, you see that a high was created, a little high right here was created. And this high is very, very, very important. You have to watch out for this high, because this is also a way to show you that these new buyers that are now in this market are now starting to take control over these sellers that are causing this downtrend right here. So you want to pay attention to what these buyers now are doing. Now you see that the price go back up, and then sellers push it back down, and then buyers push it back up again, and then we broke this high that was created. Do you get it now? So this eye that was
Yes, sir.
this eye that was broken now serves as also
Mm.
a signal. A signal to what? A signal to these buyers. A signal to these buyers that okay, we have now succeed of breaking these new highs that we have created before. Because the sellers were trying to hold the price right there, but we have now succeed to break the highs. So now this is a signal to us that we can now take control of this market. We cannot take control back in this market. We can now be in charge of this market. So now what you later see is this market will try to make its way back up, because buyers are now in control now. The market will make its way back up to this level. Now, once the price gets to this level, you also want to be patient. And now, where does your confirmation come from? Because now clearly we have had our signal right here. Where does our confirmation come from? Our confirmation comes from this level. for buyers to be able to succeed to hold the price of what these sellers are doing. So buyers right here succeed to hold the price. So since they succeed, this is a confirmation that buyers have succeeded of holding these sellers right here. So now we have confirmed that buyers have succeeded of holding what the sellers are trying to do. The intention of the sellers, buyers have succeeded of holding them. So now we are now holding the price to our favor. So now what do you want to do? You want to find a way to continue what the buyers are doing, which is the buyers are holding the price, buying the price back up. The buyers are holding the price, buying the price back up. Now the buyers are holding the price now. They are not buying the price back up. So this is what you are going to do. You are going to continue what the buyers are doing. So to be able to have this continuation in your plan, you want to wait, because this can also be tricky. This is where most traders fall victim from. So you see this price that these sellers were in control of, this level right here. You can see that the price is now back to that level. So why do I want you to be careful? Because something like this can happen. You get it now? Now, how is this possible? Because this level now is clearly owned by the sellers. The sellers own this level. These are their price. They own this price because they have sold from this price before. So now this level is like a good price to them. So once the price gets to that level, wow, this was a full price that we bought from. I guess this is a good sell for us. Let us jump in. It's a psychological thing to them that, okay, we bought at 60 before, price went to 90. You get it now? We sold at 60 before, sorry, we sold at 60 before, price went to 20, and then price is now back to 60 again. So it's clearly to them that we can still sell from that 60 back to 20 again. It is possible because when we sold from 60 to 20, we made a lot of money, right? Which is this market right here, which is this move that happened right here. So they made a lot of money from what happened right here. They made money from this. So if the price gets to this their level again, it is clearly to them that they can still make money from this again. You see the psychology thing behind this. Now you understand this now, and you don't want to fall victim of the trap that these sellers might be able to make right here. So what do you want to do? You want to wait for these buyers to finish the work for you, and the finished work is for these buyers to hold the price right here around this level. As soon as they hold the price, they are now able to gain control and push the price upward. So now this is where you want to jump in. Now once the price goes above this level, and then the candlesticks that are forming around this level, if the candlestick close above this black line, if the candlesticks close above this black line, that is when you want to be stepping in. That is when you want to be doing what? You want to buy. That is when you want to buy. Because now, if this candle can close above, just like it is indicated right here, if this candle can close above, it clearly tells us that these sellers are not taken out by these buyers because of this structure that formed above this level. So once the price breaks above this level like this is where you want to enter for a buy right here, and your stop loss you want to put it below this level, and your take profit you want to put it above this level. Now if this high is high enough, you want to extend your profit to this level, but since it is clearly at this level, you want to put it on this level. If you are working with a plan means how much are you risking and how much do you want from the market. Let us say I am risking $1 from this risk right here, and how much do you want to make? I want to make $3 from this $1 I am risking right here. So now clearly you want to make this risk to reward. You want to make it theory right here, because now you can see that it's clearly zero. If you are risking $1, if the market gets to this high, you will be getting $1. So it doesn't make any sense like this. So if this gets to 1, which is you are making $1, if it gets to 2, which is 2, you are making $2. If it gets to 3, you are making $3. So this is what you want to be aiming for, a theory reward. Once you are risking $1, you are making $3. So once you enter your position right here where you buy, your stop loss is always going to go below this level. This level is the level that these buyers have fought. They have made a mark in this level that sellers can no longer go below this level. So we are now in control of this territory right here. So now this is where your stop loss want to be going under right here, because now you want these buyers right here to back you up. You want them to back you up, and you want them to take control and give you this whole profit right here. So now you are now in the side of the buyer. You are not taking their side. Since you are taking their side, you are staying at their back. This is their back right here. So you are staying at their back right here because you are taking their sides. So now whatever the buyer have the potentials of doing is going to be, the buyers are pushing the market higher again, which is if they succeed pushing the market higher again, we are going to create a new what, higher high right here, because now when the price break above this level right here, we create a higher high. Now when the price breaks above this level right here, we did what, we create a higher high right here. So you get it now. So along this way, from here like this, is going to be your profit factor. This is where your profit is going to be sitting in. Price can get to this level right here, and if the profit makes sense to you, you can take your profit and exit the trade. It was a good trade, yeah. So you have to repeat all of this again. If you exit your trade, you have to repeat all of this again for you to be able to be at the right side of the market, so that the market will be in your favor. And do not forget, when this market makes a higher low right here, this low is higher than this one, so it is a higher low, and the price makes a new high. This high right here is higher than this one, so this is a higher high, and then this seller sold the price back down again. We create a what, a higher low right here, because this low right here, this is a low from the sellers. It is higher than this one, and this one is higher than this one. So clearly, this is a low, this is a higher low, this is a higher low, right? So clearly, this is a high, this is a higher high, this is a higher high. This one is higher than this, and this one is higher than this. So this is how you want to approach the market from the signal. From this signal we had right here, we want to have a confirmation from what this, sorry, okay, let's see if we can have that correctly. This right here, what happened right here, what happened right there, it is a confirmation that the buyers were able to hold price, they succeed of holding price, and then that's a confirmation to you, the individual that is trying to make money from the market, that is trying to participate in what the market is doing. So this is a confirmation to you that the buyers have succeeded in holding the price, and now what the buyers will be doing next is what you want to what, continue. You want to continue the repetition of what the buyers are doing, and this is clearly the repetition of what the buyers are doing. The buyer's job is to push the market upward, but do not forget, wait for the market, wait for these buyers, wait for these buyers to take these sellers out of the way first, because these sellers is blocking the buyers way. Wait for them to take out their position, to clear them out of the way, before you can now step in and enter the market for a buy. and then you will be at the side of the buyers because they are not the one controlling the market. You'll be at their back, and then you will not wait for the, you know, whatever the market of the buyers are able to do at a point. If they can be able to break out this high and then they succeed along that way, you're going to see yourself in profit. So now you want to trust this, what these buyers are doing. You want to trust them because they are now in the market. Trusting them means holding your position. Trusting these buyers means holding your trade. Trusting these buyers means holding your position to what? To take profit. You get it now? Just trust, you just have to trust them automatically because they are clearly the one showing you sign. They are showing you the signal that they are in control. They are showing you the confirmation that they are in control. So just trust them and just continue what they are doing. And you find out that you will be in profit of what the buyers are doing. So this is the process of you buying the market. So this is clearly what you want to be doing. So this price right here, what the price will be doing right here is clearly your what? Your continuation. So this is where you want to start to continue what the price is doing. So this is your continuation of what the buyers are doing. Do you understand? Alright, so this is very simple, it is very clear, and it is very clean. Just for you to understand what the buyers and the sellers are doing. And once you find out that these buyers are in control, follow the buyers. If the sellers are in control, follow the sellers. It's as simple as that. And this is the part of the buying. And we want to jump in to the sellers part. So I'm going to make this selling part very quickly because it is like a duplicate thing of what these buyers, it is like the opposite thing of what these buyers are doing. So clearly, what we want to be identifying next, we want to identify the highs and the lows, which is these lows and the highs. Once you jump into the chart, the first thing you want to do is identify the highs and the lows, right? So you want to identify the highs and the lows. So where is the highs in this market? This is the highs.
That is the high. This is the high.
This is going to be the high of the market. And you can see that this was the high, and then the market was selling. It was selling. It was selling, and then it stopped at a point. Now this is the low of the market. This is the low of the market. Do you understand? So now what is this? This is clearly stating that this is the high of the market, and this is the low of the market. This is the high, this is the low. So at a point, this high right here is controlled by the sellers. You can see they are controlled by the sellers. The sellers are the one who push the price back down. And this level right here is controlled by who? It's controlled by the buyers. So these buyers will clearly be in control of this level right here. So now, since this level is controlled by the buyers will be the one to push the market.
That is lower high now.
This is a low. This is a low. This is a high. So since this low is controlled by the buyers right here, because the buyers were able to hold this level right here. So what you will see the price reacting to next is the price will be going up because it is controlled by the buyers. Buyers are pushing the market up. So because this is a downtrend, the market will clearly want to be showing you sign that it is going down. So since the market is going down and is going to be showing you sign that it is going down, the market is going to be doing what? It's going to be selling. So now, once these buyers take control of this market, at a point, these buyers will stop taking control. Why? Because these sellers that sold the price right here, they don't want these buyers taking control to take control over them to create another structure. So they want to maintain the structure to their favor. So what they will do, they will hold the price of what these buyers are doing. Once they hold the price, they will take the price to their own favor. They will hold the price and then they will add more money to the market so that they can be in control. Now, what do we see here? We have one sellers, two sellers. What do we have here? Just one buyers. Only one buyers in the market. So since there are two sellers in the market is going to react to these two sellers. So right?
Okay.
So once the market reacts to these two sellers because they are not the one in control. So what you later see is these buyers are now in control of this level. This price of this level are controlled by the buyers. So let's just say if you extend this level all the way to this level right here, this is the level of the buyers. This is the level of the sellers. And this is the level of the sellers. So now, this is the level of the buyers. The buyers push the market up. Because this is the level of the sellers, the price will hold at this point. And these sellers will now add more money into the market to push the price downward. Now, all of this is happening because this is the downtrend, because this is a seller's market. Because you can see when this was going up, this was a uptrend because these buyers were in control. Now this is a downtrend. The sellers must be in control. They must be in control because this is their market. Do not expect momentum from the buyers because they are weak in this downtrend. The sellers are stronger in this downtrend.
Yes.
So now the sellers will later, what you will see, they will push the market downward because they are stronger in this trend, the downtrend. So the sellers will push the market downward. So as soon as they push the market downward, they will push it lower than what these sellers, what these buyers were doing. You can see this price right here, they push it lower than this level right here. You can see once they push it lower than this level, you find out that these buyers right here, we want to stop these buyers, we want to stop these sellers from taking the price down. So they will want to hold the price. They will want to hold the price, which is the buyers. They will hold the price and then push the price back up again. So what they are trying to do is they are trying to see if they can control the market and push it upward. But if the price gets to this level right here, these sellers are in control of this level, right? So they will not want the price to go higher than this. And if these buyers right here were able to push the price higher than this, don't forget that the sellers are still in control of this price. They are still going to hold the price right here. If these buyers were able to succeed and break this price, sellers are right here. So they can still possibly push the price back down again like this. It is possible because this is their market. So if this is happening, if this trend right here is happening at a point of time, if this point of time is happening, do not try to buy this market. What you're trying to do is just wait to see the reaction of these sellers. If the sellers can take control and you see them pushing the price backward like this, if the price is selling again, you don't want to sell this market until you do what? Until you take out these buyers right here. This is the big obstacles. This is what you need to eliminate. These buyers is what you need to eliminate. So when the price gets to this level, the sellers will hold the price and then they will start pushing the price back down again. And then what you later see is buyers will try to hold the price because they will not just allow the price to just go straight down. They will hold the price right somewhere around here, and then the buyers will push the price back up again to see if they can continue this trend. This can also happen. This can also happen. That's why I say do not trade at all once all of this is happening. I'm using this different type of structure to make you understand that it can be different from this. You understand? It can be different from this. So the buyers can be able to eliminate these sellers right here, but these sellers will not allow that to happen. So they will try to sell the price back down, but these buyers will jump in to hold the price to see if they can take it back up to form a uptrend. But because this is a downtrend, if these buyers succeed of pushing this price back up again, guess what? These sellers that hold this level before, because they were eliminated in the first place, they will jump back
Okay.
to this level again. Remember, once 60 is the price they sold from to 20, if the price come back to 60 again, they will want to try as
Yes.
hard as possible to sell from that 60 again. So now the price went back to this 60 again at this level, which is the level of the sellers. So this is where the sellers now took control. They will now, okay, let's take advantage of this 60 now. Now we are going all in. We want to go all in. So now they will go all in, put in all their position and push the price back down. So once they succeed in breaking these levels of these buyers, once they succeed in taking these buyers out, once they succeed, you see that the price will make a new low like this. As soon as the price is making a new low, do not forget the price is approaching these buyers right here. You get it now? Now, like I said, you need to eliminate what these buyers level are doing. Once you eliminate it, you have succeed in putting the market in your favor, and then you can now gracefully sell the market in your position. So now, if the price gets to this level, these buyers right here can also take advantage of this and push it back up again. You can see all the traps in the market. You want to wait from these sellers that push the market back down to take out these buyers, just like as if they take out these buyers right here. So once they take out this with a body close candle, remember the body close candle has to happen. Once the body close candle happen, this is now where you need to continue what the sellers are doing. So what you want to do now, you want to put your position right here at the body close, which is this body close candle. Your stop loss is going above this level that the sellers have secured for you. You get it now? Now you see that your stop loss is now big because of all this misunderstanding that happened right here, because of the structure. So the structure sometimes will determine your stop loss. You have no choice than to use that bigger stop loss. So what you later see is the sellers, you put your order, your stop loss right here, you enter at this level, and then you target this level. And because this level does not make sense to us to target, we want to target, once we are risking $1 from this level right here, once we are risking $1 from this level right here, we want to make $3. So we want to take this 0, which is risk to reward, we want to take it to 3. So we want to clearly take it to 3, or let's just use 2. 2 is fine just because of the class and everything. So 2, I want to take it to 2. So once these sellers succeed of holding this price, what you see is the buyers, the sellers, once they succeed in breaking this level of the buyers, which is this level right here. So this is your entry. Once you enter from this level, the price is going to ride all the way down. You get it now, because this is clearly selling, this is a downtrend. But what you later find out that the price can hold around this level because of these buyers right here. And what you see that the buyers push the market back up like this. You get it now. So these sellers have no choice than to hold the price again at a point and sell the price and continue the sale. So you want to trust what these sellers are doing. Just trust them. Once you have your signal right here that the price is ready to sell from here, once you enter, trust the sellers. Trust the sellers. Just trust them to just take control of the market. As soon as your stop loss is right here, just trust them. But if the market does not go in your favor, that the market go against you like this, because of what these buyers were able to do right here, it is fine. It is all right. Just take the loss, accept it, and then move on to the next trade. Look for a new signal, look for a new confirmation, and a new continuation. That is what you want to be doing. Once this happens, just take the loss and then accept it. All right. So yeah, just accept the loss. It is part of the game. It happens most of the time. You take losses. But if these buyers, if these sellers right here, if these sellers succeed in holding the price right here, you see that the price will continue and going up. But what you want to do is you just want to trust what the sellers are doing. Just trust them, and then just trust them in moving the price in your direction. Because what you are clearly doing, you are hoping on these sellers to clearly win the battle between these buyers and these sellers. You are hoping on them to win because you are relying on them to win. If they win, you're going to win. So you want to trust the side you are in. Once you trust them, automatically it means you are trusting your analysis. Once you trust your sellers, once you trust what the sellers are doing, so it means automatically that you trust your analysis. So you want to trust all of this that is happening. You want to trust it. You want to trust it. And the only way you want to be jumping in is from this level. As soon as we take out these buyers, where you want to be jumping in from the buying is from these levels. As soon as we take out these sellers. So it's as simple as clear as that. So this is how you want to be approaching the market. And of course, this is going to be your signal. Do you understand why I said this is going to be our signal?
Yes,
All right. So all of this now, where's our confirmation? Because when we have our signal right here, once the price was held by the buyers, we clearly identify this as the confirmation, and then the break of these levels where we enter for our entry was the continuation. Now this is our signal. Where is our continuation right here? This is the question to you. Where is our continuation? Where is our confirmation?
confirmation.
Yes. Where is our confirmation? This was our signal because the price of the seller were able to break below, breaking this level of the buyers, which is causing a signal.
Can you remove those black lines?
What was this black line?
Yes, the black ones. Can you remove?
These ones?
Yes, those black ones.
Where is our confirmation?
I mean this black line in the middle.
This one?
Yes, all those ones.
So where is our confirmation? Do you know that this black line is what is going to help you to identify your confirmation? And you are removing them. So we want to put them back.
This drawing is cleaner than the chart. That's why sometimes we use to confuse.
Yeah, we want to put them back for us to clearly identify our confirmation now. Now, once we had our signal, you can see that the price went all the way up. We will take out these sellers right here, over here. So when we take over these sellers over here, we had another sellers waiting over here. So these sellers were the one that was able to hold the price of these buyers. These buyers were really strong. So they broke out this level. They took out these sellers. So these sellers were the one that was strong enough to hold the price of what these buyers were trying to do. So over here from here, this is going to be our confirmation. So you get it now. So from this selling point right here now, it's going to be our confirmation. Why? Because these sellers were able to hold the price successfully. Because now these buyers were able to hold the price successfully over here. Now these sellers were able to hold the price successfully over here as well. So this level right here is going to be our confirmation that the sellers were able to hold the price of what the buyers were doing. So this is our confirmation. Where is our continuation coming from? Our continuation is coming from not this level. You remember that the buyers were able to hold this level back up, then these sellers took advantage of this level and then they sold the price back down. So where is our continuation coming from? Our continuation is not coming from any of all these levels. Even if the price break below this level right here like this, our continuation is still not coming from here. We have to take out these buyers. It is a must. We have to take them out for us to be able to sell. So once this price break below with a body close candle, once it break below and then close, this is our continuation. So now we can boldly enter for a sell. Our stop loss above here, and then we target 2%, which is 1 to 2 risk to reward of whatever we are risking. Does it make any sense?
Yes, boss.
All right, good. So this is how it clearly is. This is how it looks like when you are using this strategy. So I just want to take a screenshot of it. Do you have any question?
I don't think I no, sir.
Do you understand everything I just explained?
Yes, boss.
All right. So now we are going to go to a live chart analysis. So we want to be selling.
Yes.
We want to be selling. This is the daily. The daily is the most higher time frame right here. So the daily is telling us that Bitcoin is selling. So what do we want to be doing? We want to be pointing our highs, our lows, because that is the first thing we want to be doing while trading the S.C.C strategy, right? So now, where is our highs and where is our lows? We want to start from the daily now. Where is our highs? Where is our lows?
Hold on. This okay. Can I identify now? But how will I point it?
Is this the low?
This no,
is this the low?
See our high up.
Is this the low?
Okay. Where is your high? Can't see your high.
Can you see what
this is the high?
This is the high. This is the high.
That is high.
Okay. You say this is the high. Let's mark the high. So where is the low?
That is the low down there.
Now we're down here.
No. Down.
Down here.
Yes.
All right. Say this is the low. So this is clearly the low, right? So this is the daily. So whatever is going to happen right here in the daily, it's going to take a while. It's going to take a month. It's going to take days. It's going to take weeks for us to clearly want to identify whether the price is coming back to this high, whether the price is going to break this low. You see, when the price gets to this low over here, once the price gets to this low, you can see that it rejects back up and then makes a new highs, then come back again, then it's trying to make a new high again. So clearly,
come again, boss.
I said when the price makes a low right here, this is the high, right?
Yeah. Yes.
This is the low.
Yes.
And the price makes a high right here.
Yes.
Makes a low.
Yes.
Then high.
Yes.
Then it makes a low.
Yes.
This low is equal to this one.
Okay.
As soon as the price makes low, it was not able to close. Remember, any close below a low or a high must be a body close candle. You can see this, it's not a body close candle, it just gets to the level and then rejects off the level, creating a high.
Okay, show me body candle.
All of these candlesticks you are seeing here is body close, is a body candles. But an example is this low, this is a low, and this is a high right here. Right here. So let's use this. This is a low, and then the price makes all the way to this point, creating a high, and then the sellers were able to hold the price, then push it back down. So because this is a downtrend, the sellers will always want to take control of the market, just like we learned in our previous class just now. So this is a low. This is the buyer in the market. So the buyer were able to push the price to this point. This is the sellers. So the sellers now hold the price over here, and then before we know what the sellers' intention are, they must break these levels of these buyers.
Okay.
So now you see that these first black candles came to this level and then it closed. You can see this candle came to this place and then it closed. The other candle, it's a, let's just say this is a bullish candle because the price sold all the way to this downside and then it closed above. So this is also a bullish candle because of this buyer's strength right here. The sellers were able to sell to this level. These buyers were able to push the price back up and then close because this is a seller's market right here. So this candle now that push all the way to this place and then close, this is the body close candle.
Okay.
So this body close candle now did not happen here.
Yes, it did not happen there. Yes.
So clearly that these buyers were actually in control.
Okay.
So these buyers push the price back up, creating a new high right here, which is
Yes.
these highs. It was these buyers, I can tell you that it was these buyers and these buyers right here that pushed this market to this level right here. So the buyers push the price back up right here, then the sellers over here, over this level right here, push the market back down to this level. These buyers now push the market back up to this level. Now this level that these buyers now push the market back up to, they have caused something to happen. They have caused something to happen. Now don't forget that this place is for sellers. Right? So I guess we can do something here. We can do a replay here. Yes, it works on the daily. Okay, good. Now we have our buyers.
Boss.
Yes.
You are paying for this trading view, right?
When you are using trading view, the daily time frame is always free to do replay from. Do you understand? When you are using trading view, the daily time frame, if you go to your, even if you have not paid for your trading view, if you go to the daily time frame, you can do a replay from that daily time frame. But from the 4 hours below, the 4 hours, 1 hour, 15 minutes, 5 minutes, 1 minute, and so on and so forth, you need to subscribe to use them. From the daily time frame, it is free. That is why we are able to do this right now. Alright, so this now, you can see that once the sellers sold to this point, the buyers hold the price and then push back up right here. Then the sellers hold the price right here. Clearly, it is seen right here that the sellers hold the price and then it was pushed back down, and then the buyers were able to push the price back up to the sellers. Now, if this break above, you know that the buyers are in control. Now, let's see what the buyers are trying to do here. If they succeed in breaking the price above. So now, let's use 0.5. So I guess this is too slow. Let's go 1x. Let's see what happens if they are able to break this place. The buyers, because now the sellers are in control. Sellers are in control. You can see that the buyers push the price back up again, and then we have this level now still sitting like this, right?
Yes.
So something need to happen. Either these sellers right here breaks this level downward, like this candle, or these buyers, break above with a bullish body candle. So we are waiting for these things to happen. We don't want to trade yet, so now we are waiting.
On a daily time zone.
Yes. So now look at what happened.
Yeah.
Did you see what happened? This big bullish candle.
Yes,
we break above these sellers right here. Yeah. So now we break it. We see this second candle now coming down. This is a sign that the sellers have hold the price right here. These sellers hold the price and then they are pushing the price down now. Now don't forget, once you have your signal.
Now this is the signal.
Yes. Now once you have your signal, you want to wait for a confirmation. And the confirmation is something like this.
Retest.
Yeah. And then back up again. You can see. So we are waiting for this thing to happen. Now we have a signal. We are waiting for the confirmation now. You can see that the sellers now. You can see the second candlestick is from the sellers. They push the price down, and let's see what happens next again. The second candlestick is from the sellers. Now what happened again? The second candlestick.
They started pushing it down.
Now the other candlestick now is from what?
From the buyers.
Now good. You can see that these levels from these sellers now is controlled over here. These sellers now, they are controlling this level right here. Clearly, right? So once the price
so
now the
price are retested like this now.
Yes, the price have confirmed, which is you can see that these buyers they're able to hold this price right here. This is your confirmation.
Okay.
And the reason why the buyers were able to hold it, and the reason why the buyers were able to hold the price right here, because they were also buyers sitting right here.
Down there, yes.
So they were able to hold the price right here. Now, what we are having now, right here now, is our confirmation. Right?
Okay. Can you make it a bit long? A bit long.
So this is our confirmation right here. Now, do you understand?
Yes, sir.
Alright.
Confirmation.
This is our confirmation. So now what we are looking for now is our continuation.
Okay.
And our continuation has to happen from, as this signal candle happened, we need to see something like that happen again right here. You get it now? So once the body candle close like this, it needs to happen again. Once it happen again, this is where we are going to be entering for our continuation. Let's see what the price.
I thought it should be at that retest.
This retest. This retest. No,
that's the best place to pick the trade from.
Yeah, people take trades from this place for a buy, but I can tell you that when the price buy from this place to this place, it's not going higher. It might just sell from this place back down again.
Okay.
Because of these sellers right here. Because they are in control. You can see what happened here. When the sellers sold the price back down, the buyers take the price back up. Over here, the price did not break. It sold back down again massively. To this point again. You can see we don't want this thing to happen right here. We don't want it to happen right here. So what we want to do, yes. So what we want to do is for us to now wait for this body close candle now to happen again, right here. So now let's play and see what the buyers are trying to do. So the next candle is for the buyers. You can see what happened. The buyers tried to break before, but the body candle
he went back.
Yeah, went back. So this is a rejection that the sellers do not want the buyers to take control. So now let's continue.
Sellers are still in control.
So the next candle now is still the same thing that's happening. Now the following candle, now we have the following candle about to break. And now what's the candle doing? You can see what's happening.
Yeah.
The buyers try to
break like this.
The buyers
break like this.
Yeah, but it's like the sellers are still in control. But yes, because it's rejecting. Thank you. Now this rejection says a lot. So now let's see what is happening. Now we have a break. Now we have a break. Now I can tell you that I just want to explain something to you real fast.
If you want to shoot now.
This, because this is a daily time frame, it's going to hard for you to understand what is happening right here. Because our trade normal is from the 15 minutes.
Yes.
Right? So this is the daily. So what we want to do now is let's take this thing back to this point.
Okay.
Right? So over here like this on the daily. To me, this has already broken this line. You can see clearly it has already broken the line. But now, for us to really know what happened here, let us identify this chart right here like this. Let us do it like this because I want to scale it up now. Once we go lower to the 1 hour, we won't be able to do the replay again. But let's just go to the 1 hour, see what's happening right there.
Okay.
And see what's happening right there. So I want to leave the replay. So you can see what happened right here. Just forget as if this thing never happened. So over here, this was the break, right?
Yes, sir.
This was the break. So let's get down
Yes,
to
sir.
1 hour. So let's go and look for that chart right here. So this was the break. You can see it now.
Yes, sir.
So
Yes.
now what happened? So this was our highs, our signal highs.
Yes, sir.
This high right here
Yes.
is our signal highs.
Yes, sir.
You can see. You can see it right here. We indicated that this was our signal highs, and then the price reject. This was when the price started confirming. You can see the last confirmation right here, and then the price started going back to that line again. The price has already broken this place before. The price has already broken this place before because this is the 1 hour, but this is what we are looking at on the daily. This was the real breakout. The real breakout. No, remember this was those rejection from those daily. This was those rejection from those daily. So this was the real breakout from the daily. So now we had this real breakout. Now I told you that once this breakout happened from this line again, what do you want to do?
Yes.
What do you want to do once this breakout happened?
Once it happened, you take your trade.
You take your trade, right? So now if you look at this low right here, this low is important. This was also like a confirmation. This was a signal, kind of, because those rejection in the 1 hour means something. So this is like a signal. This is like a confirmation.
The breakout.
This was this is like a confirmation, and then this was the initial breakout. You see, when the price get to this place, it rejects back again, and then finally it breaks out. So this is a signal in the 1 hour. This is a confirmation in the 1 hour, and this is the initial real breakout. This was not calculated in the daily because it was rejected, but in the 1 hour it was a signal.
It was signal,
yes. So this now is the 1 hour confirmation. We already had the daily confirmation, which is this one right here. This was the 1 hour confirmation, and this was the 1 hour break.
Yes, sir.
Which we identify as the daily break too. You can see that the 1 hour now later align with the daily.
Yes, sir.
All right. So now we said once we had our break, we are going to take our entry from where the body close candle. This is the body close candle right here.
This big one, the big one, right?
Yes, this big one. So we are going to enter from here. There was our confirmation. This was our confirmation. We say we are going to be protecting the low of our confirmation. This was the confirmation. Now we are going to target 1 to what? 1 to 2. And I told you before that if this signal eyes, which is this signal eyes like this, does not make sense to you, you can see that we hit take profit here.
Yes.
We take profit, but if it does not make sense to you to take your profit here, just trust what these buyers are trying to do. What these buyers are trying to do over here like this. Trust what they are doing and just take 1 to 2 from this trade. You can see this is your stop loss and 1 to 2 is your risk to reward. Now you can see that what happened now. The trade started running in profit. Why did the market sell from here? It is because the sellers are in this level.
They are very strong there.
They are very strong here. So the sellers are here. So they don't want the price to go any more higher. That's why they hold the price right here. But this market is trying to go in the favor of the buyers. That's why I told you aim for 1 to 2 and then trust the buyers. Now you see that this price right here later is now selling. Later the price is now selling because of this seller. Most people will want to jump out of the trade because they now think the market is not reversing. But
somebody like me, I will jump out.
So the invalidation of this trade is when the price go below this level right here, your stop loss. So hold it. If you hit stop loss, you hit stop loss. But we are waiting for take profit. But now we see that the price later on start going back in profit again, all the way to your TP. So the price might not actually hit your TP at a point. You can look at it. So look at where the price ended up. So this is enough profit already.
It's enough profit to online.
So you just like take your profit and then you are done for the day. Most people want the price to hit take profit, but that's not always the case. as long as what this market gives you here is enough, just see that the market is running close to your profit. Most of the time it is your profit, most of the time it tends to want to reject, but as you see that the market is trying to reject, you just take the profit at the close, wait for another position again. Take your profit.
Yeah.
See your profit, take it. That's just the market. You can't always wait for take profit. But this thing here makes a lot of sense for the price to reverse in your favor, trying to eat a take profit. So you psychologically, maybe with time, in the process of you executing this strategy, you will know when to take your profit. You will not have the feeling, the sting that this price is trying to reverse. This price is trying to reverse. So you felt it and then you take your profit. At a point, you get used to it and then you take your profit automatically. That comes with experience. You understand? So
Yeah.
taking profit is essential. Allowing the price to hit or take profit is not always the case, but as long as your plan works and you know that if the price go below this low here, you know that you are wrong. Or if the price tends to go back in your favor, you know that you are right. This is like how many pips here to your profit that you won't take profit. You get it now. So you can see that this makes a lot of sense and this also works. It works. So it's clear.
Yes, sir.
So you see that it works over here and then the price started rejecting back down. You can see that the price reject back down, and this
Yes.
was the, let's go back to the daily. Let's go back to the daily, and what we are going to do now here now is follow up with that daily that I was telling you about. So
Yes.
yeah, let us follow up with that daily. So now we said this daily is starting from, let's wait for it to load. All right, so the daily is okay. Yeah, we are on the right track. I guess we are on the right track. So remember, this was our signal on the daily, right?
Yes, sir.
This was our signal on the daily. Do you remember?
Yes, sir.
Okay, so
Yes,
now
sir.
we want to enter from this daily signal now. We enter for this daily signal. Our stop loss is going below the confirmation, right?
Yes, sir.
All right, so we want to target 1 to 2, which is this 1 to 2 right here.
Please, how do you know this one is going to do? Because I've forgotten it.
Look at this right here now.
So,
It's showing you 2. If you extend it forward, it's going to show 3.
yes.
This is like you are making 3%.
Okay.
This is like 2%.
Okay.
All right, so we are aiming from 1 to 2.
Okay.
So now let us play the BTC chart and see what happened.
Okay.
Do you remember how we enter here?
Yes, sir. Of
This
course.
was our signal. This was our confirmation. This was the
This
break
was
of this
confirmation.
high. This was our
Yes.
continuation. So we entered here, our stop loss here.
Yes.
We aim from 1 to
Yes.
2, and then we play. Let's see what happened. Can you see what is happening now? If the price
Yes, sir.
hits that stop loss, we are out of the trade. But I bet you the price will not hit
Okay.
that stop loss. Or it might. Or it might not. If it hits stop loss, then the price will reverse back up again. Now this
But I've not hit.
the price will reverse back up again. So now this is the current price of BTC. You can see that the timer is now on. So the replay is off now. The timer is now on. What happened here? What went wrong? We can see we were in profit and then we end up coming back. We get wicked out a little bit. You get it now? And then the price is now reversing in our favor. So it means that the way we position our stop loss was very wrong.
Yeah.
So now understand this. You can see this week, this last week right here,
Okay. Yes.
like this. So our
Why
stop
you call it
loss,
last week?
it was the, like, this was not even the last week, this was the last week. From our confirmation, this was our confirmation, right? We say we are putting our stop loss below of the confirmation, right?
Okay, below the confirmation.
So
Yes.
this confirmation low, the weeks end up here.
Because that's
Look
what I
at,
want to
yeah,
say.
look at the week end up all the way to this place. But
Yes.
we had this week,
Because the stop loss would be much.
Yeah, we had this week, and then this second week end up here. So we don't want to take our stop loss to here. But this week here
Okay.
makes sense that if we extend it,
Yes.
we can see that that is where the price rejected from. So
Yes.
if at a point we were able to move our stop loss to clear
A
out
bit.
that week,
Yeah,
that
distance.
level, we were still
Mm-hmm.
able to
Mm.
maintain the trade and be back in profit. So now the way we set our
Mm.
stop loss also might be wrong. Like that is our fault. That is not the strategy's fault. That is our own
Okay.
fault because now I just clearly just put the stop loss there and I get whipped out. But that is not the strategy
Mm.
fault because the strategy is still intact, but I mistakenly just put the stop loss in the wrong place.
Mm.
So now you see that the price is now going back in profit. And this is the current chart of
Yes.
BTC. And anybody who wants to trade BTC now should buy BTC. Do you understand?
Yes,
So
sir.
this is how the chart is running right now. The chart is running in buy, in profit. We have our signal, we have our confirmation, and the continuation is happening right now for a buy.
Mm.
So we need to buy BTC. And this is what the daily time frame. So this buy is going to be a very long buy.
Mm.
Do you understand?
Yes, bro.
All right, so good. So far we've explained everything. I'm glad that you understand, and the strategy is very clean to you. You understand it, right?
Yes, but I still want you to analyze this chart till 15 minutes. Like the hours you are using to analyze the chart. You
This
have
same thing,
analyzed
this
some
same thing that we are
trade.
doing right here, we already did it on the
Okay.
1 hour, and the 1 hour was successful,
Yes.
right? So it is
Yes.
fractal. The market is fractal. It happened on the 1 minute. It happened on the 5 minutes, the 1 hour, the 4 hours, the
Yes.
daily. This is the daily, and it's still happening right here. The one
Okay.
hour is still
So
happening.
so okay. So should I say that when if I like if I want to take a trade now that I can come down to 4 hours and check come down to 4 hours and check this market structure, then go and analyze it on 1 hour.
Start
Then
from
after
start from
analyzing on 1 hour, I go to and take the trade. Is it
yeah,
right?
yes, that's true. You can do that if that is okay with you. Whatever time frame you want to trade, but I advise you take your trade from the 15 minutes, analyze
On the 15 minutes.
analyze on the 4 hours, then on the 1 hour, try to understand what is happening on the 1 hour, which is understand the structure well, and then the 15 minutes you take your trade. The 4 hours, the 1 hour, the 15 minutes is what you want to be using. And the daily. The daily is just for a higher perspective of what's going to happen in the following weeks. And then the 4 hour you are doing your analysis. And then the 1 hour you are still doing your analysis. So that 1 hour analysis is where you're going to be getting your signal and your confirmation. That your continuation has to come from the 15 minutes. You have to wait for the 1 hour body close candle to happen for the continuation, and then go to the 15 minutes to execute so that you have a better stop loss.
This one is confused.
On our next class, I will break down all of this to you.
Okay.
But what I want you
Okay,
to do
boss.
now is for
Okay,
you to
boss.
go and put this in practice. Use a demo account,
Okay,
take a
boss.
trade for throughout
Okay, boss.
next week, and then show me the result.
Okay. Yes, boss.
Alright. Open a demo
I
account,
will.
take a trade, and show me the result using this strategy.
Yes, boss.
Do not trade any other
Yes, boss.
strategy on that account. Use this and show me
Yes,
what
boss.
you came up with.
This particular line we are using. There's
Yes.
another one you used to use on the when you want to drop chart. I think this one is. I think I like this this particular line that you're using. This long lines.
Lines.
Instead of that one. Yes.
These
I mean
lines
the
right
black
here.
lines.
These
Yes.
ones.
Yes.
These
Yes.
ones.
Yes.
What happens to the line?
Which of them? Which of them? What's the name of that particular one?
This one.
Yes.
It's a trend line. This one.
Okay, trend line.
Yeah.
Okay. Because there's another one you used to use. That would be like a square. You used to long.
This is a rectangular.
Yeah, that one.
This one is a rectangle.
I think the other one is more better, right?
Yeah, most times I just mark it like this. I just mark it like this. mark this buyer zone like this. Then you can say you can just mark this level like this. Buyers like this, you know. But most times it's kind of like tricky, it's kind of like confusing. Like I just like to prefer using the body close candle to indicate, you know, where the buyers really are, where the sellers really are. You understand? So it's more of a high thing, like what you can see. You get it now.
Okay.
So I just mark this
Yes.
body close candle over here. So because this is where
Okay.
the sellers were able to lock in the price and start selling from. This is where the buyers lock in
Ah.
the price and start buying. So you can look that
Mm.
this body close candle breaks below this place over here. So if we want to take our sell position from this place, taking it from here, our stop loss is going to be higher. We're going to target, you know, this level right here like this. So it's still only going to be in profit, but we're not going to put our stop loss right there. We're going to put our stop loss here above this last high right here. So our stop is going to go back there and our take profit. You can see this is clearly 1 to 3 already. 1 to 3. So this should be a good trade of course. If you want to aim for 1 to 2, from 1 to 2 will be like this. So we are going to take profit before the market to even, you know, do something else. You can clearly see that the market is trying to buy back to this place. And what the market is trying to do on these levels right here is, you can see what happened here now. This is a signal, a new signal.
Yes, that is. Yes, boss.
You can see that this is a signal. Let's just remove this. This high is valid. So this is a signal. So the market is trying to come back and confirm. You get it now? So if the market
Yes.
come back and so if the market clearly comes back and confirm, don't expect the market to go higher than this because this seller will not allow it.
Mm.
So if the price gets to these sellers right here, the sellers will want to hold the
Mm-hmm.
price to see
Back.
if they can push the price back down. So if the price come back down again and then close below this level, this is where your entry is coming from, right? Yeah, below this level like this. Your stop
You
loss
sell
is,
again.
yeah, you sell again, and then you're gonna put your take profit on this level like this, or you're gonna aim from 1 to 2 like this. So your trade is clearly going to be like this because these sellers will not allow it to happen.
Okay.
This is what is going to happen right now on BTC, but this is going to happen in months time, in a week's time. But since you
Okay.
already understand, but since you already know that the price has broken this level like this, you can see that the price is now back up
Yes.
again. So
Yes.
you enter for here, your stop loss below this place, and then you are targeting for what? 1 to 2. 1 to 2 right here like this. So this should be your trade on BTC. If you are buying here, allow the market to consolidate over here because the market is clearly going to do, you know, what you do not understand over here. But as soon as the market gets to break this level and then close below this level like this, you are taking your entry
Mm.
from this level, then you are taking it back down again. So
Mm.
that is all.
Okay, boss. Thank you so much.
Alright, so on our next class, we will still like get
This is so
deeper.
sweet.
So sweet.
Yes, so. Because if you teach me this thing constantly 3 times a week or more, 2 times a week constantly, I know we'll get problem again now.
So this is clearly how forest is very easy. It's very easy. It's just all those mental how they're trying to, you know, make everything
Everybody and their own pattern.
complicated. People, yeah, everybody with their own
I
pattern. But
think this one is the more easy way itself.
this is the market. You are trading the reaction of the market. You are trading the price action, what the market is doing. You are trading what the market is doing. So it's just simple. Just like if you have been struggling for 2 years, 3 years in forex trading, what you are struggling
Mm.
about has always been right in front of you
Okay.
without you knowing it.
Okay. But boss, why you don't share signal?
Signal. No, I don't
Yes.
like sharing
You don't
signal. I just like I do
you
that,
like packing your money alone.
but I don't like sharing signals as if you are just like chasing the clouds and all that. You understand? So when you make money, others make money. When you lose money, they start like, you lose money today, this and that, those pressure and all that. But when you make money, they make money, they are happy. But when you lose money,
Yeah.
they are not like, all over
They
the
don't
place.
understand it that way.
Yeah. So
They just blame you. I mean,
signal, confirmation, and continuation.
confirmation, continuation.
Yeah, so
Yeah.
over here we had our signal, which is this signal right here. And we come back, we
Yes.
consolidate our confirmation, and then we are now back
Yeah.
up. So once the body candle close above, we are entering the market in our stop loss below.
Okay.
We are targeting for
Okay.
profit. So this right here is our continuation and our confirmation. So everything is kind of clear, simple, and everything
Yes.
is all about the market structure. You get it now?
Yeah.
So once you
Yes,
understand
boss.
market structure, you will apply this S.C.C to the market
Okay.
structure. It's going to make everything very easy and simple for you. So
All right,
that's
boss.
it. So forex is very easy. It's very clean. You just have to understand what you are doing. So that's it.
That's what it is. It's
Yeah.
true. Thank you so much, boss.
All right. You're welcome. My pleasure.
All right.